All right, guys, welcome. Thank you very much for attending the Bretton's Friday market wrap-up session. Today is the 9th of April already, 2021. So I just want to share a little bit before we start. We have three times a week on Bretton's webinar. So every Monday, Wednesdays, and Fridays. I see it that maybe starting from next month, we'll have a lot more webinars. I think we probably have to run it every day, and that is separate to the trade signals webinar. I have not really run a trade signals webinar yet, but then I've been giving out signals into the webinars itself. For example, like today's one, we can talk about where to enter, exit, and stuff like that as well. But I want to have specific webinars as well. You guys can hear me loud and clear, right? Okay, good. Okay. Yes. Okay, good. So Alfred, you've been looking at USD JPY, Nzd USD, GBP, Euro GBP. Euro GBP was also a little bit of my focus today, together with Euro Canadian dollar. So we'll talk about that. And you've done a good spot on USD JPY, because that's the first on the list that we need to talk about today as well with traders. And there's a lot of things going on. I will talk a little bit about how correlation has actually changed, and now it has actually given us a little bit of a little bit of a hint that USD JPY would actually be a good type of pair to actually trade starting from next week, because there's a lot of things marinated into the market from earlier this week right up to end of the trading week, which is today, and maybe a little bit more later on. So all the things that are happening has actually created a little bit of a good flow of something possible to increase the volatility and also trading opportunities for correlated pairs to the USD/JPY. So we want to really get into that as well, and we want to scout price quite well for USD JPY so that we can actually trade it in layers, in stages starting from next week, so that we can create multiple trading opportunities. So we have no doubt that it will be high volatility for the US, but we want to talk a little bit about that. Give me a second. Let me just go through the website. Basically, it's Bretton.institute. Bretton.institute will be merged with Bretton.academy. It's actually two in one. So anybody types Bretton Academy will go into Bretton Institute. Bretton Institute will go to Bretton Academy. It's all one. It's just so that people don't get confused, or even if they get confused and they either use the word academy or institute, it's actually the same thing. So that's just to help traders to get to the same place, the same website. So yes, so we will have this YouTube channel, most of the times having all the recordings into the channel. So every webinars will be recorded, and all of them will actually be put here in the YouTube channel for Bretton's Financial Trading Academy. Then, okay, so let's get into the market a little bit, just to rush a little bit through all the things that you guys need to know. Today's fundamental in terms of economic data release revolves around Canadian dollar. And then when we open up the week on Monday, we've got Euro retail sales going on. It's actually quite an important data for retail sales, okay? All the sales basically happening within the zone of Europe. But we also have released last week, this week we've released the US retail sales that actually didn't come quite well. So this is what I want to talk a little bit about, what's happening in the US, and with all the things with regards to the yield. And also a lot of people have been looking at all the stocks rising, S&P 500, Dow Jones. Now they've actually found out that all this risk on people buying trend going up and all that is not a match with the exact reality of the real economic data. So retail sales is down. A lot of other things are actually going down. So we are expecting a little bit of the reflation keyword is coming up now. Okay, so that means economic slowdown. So they have to, it's actually reawakening of inflation. So that means it needs to start a little bit. So they have not, they need to pump in again. So what they need to actually pump in, we don't know that yet. But what has actually happened is that usually the S&P 500 is correlated to the USD. It's actually having the negative correlation. Okay, so usually that was what have happened. Now the correlation has changed. That means it has changed to positive correlation. Now, last time used to be opposite. Now the S&P 500 and the US dollar is sort of just changed now to become positively correlated. Okay, so that actually means if we were to actually go on to Google, very simple, and you type S&P 500, okay, and you can see that straight away it'll come up with the figures. This is showing arrow up, so that actually means the S&P 500 is on the upside. So if it's on the upside, it has the potential for USD as well on the upside. But again, this is on a daily thing. We want to look at it, whether or not what's the trend for it overall. So this is the mistake that traders usually do, is that they look at the market like how I have done now, which is not actually the right thing to do. So I want to tell you what not to do. What not to do is to look at it straight away. Let's say this is on a day. On the day, that means on today's performance, what is going on. So they will just see, oh, S&P 500. If their strategy is to correlate to another currency, let's say now it's a positive correlation with the dollar, it doesn't mean that whatever you see now is exactly the trend. Is just happening for now. Okay, this is what it means. So it's the same if we go on to the heat map as well. Okay, it's what's happening for now, and we need to compare it with the 3 time frames. So here, for example, let's just take a look at what's going on with the heat map as well. Okay, so to continue the story of the S&P 500 as well, they have come up with, whenever the traders have actually gone onto the market, usually the big traders in the banks and all the traders that move the market, they usually look into S&P 500, the stocks, the Dow Jones, even the DAX for the European side of it, the French stocks, CAC as well. They look at all that as a gauge or indicator to look at the whole flow of money and trend and everything, and then it will branch out into currencies and everything. Okay, so at this moment of time, from how it has actually gone on with S&P 500, the DJIA and all that, it's been a risk on. That is why it's been a lot of buying of the dollar before a couple of weeks ago and all that, right? And then a lot of fall of the gold. But then now maybe that might actually change. Okay, so there may be a resurgence of gold or not. We don't know that yet. Let's confirm that with the chart as well. But that is roughly what could actually happen. Now, we want to also talk a little bit about oil, because we are in the territory of more and more data for Canadian dollar. So Canadian dollar or Canada has got a lot of correlation with oil. So I'm talking a little bit about summarizing the market for this week, and then a fresh new start for next week. And then we get into what can we trade and prepare ourselves on the price action side of it for next week. And then we want to look also with what do you call that, Australia, because there is a risk at the moment in Australia economy. The Royal Bank of Australia, as well as major experts, they have now raised a little bit of a concern over its economic growth in Australia. So we want to look at selling opportunities for Australian dollar and New Zealand dollar as well. Okay, and when we talk a little bit about what has happened in the US, and then maybe there is trading opportunities for USD JPY, for example, or USD crosses, then we want to talk a little bit about gold as well, the opportunity for trading gold. So when we talk about USD, US as a whole, and then USD crosses, we want to always correlate that and basically connect it with gold trading opportunities as well, because there is a tandem going on, okay, between all these instruments. And then we also have some news about the emergency bond buying by the ECB. So this will actually create a lot of volume starting next week onwards. Let's see what they talk about in the weekend about bond buying, emergency bond buying by the ECB. So if the lady the chairwoman itself, or the president of the ECB talks a lot more this coming weekend, or even on Monday, about the emergency bond buying, then if the emergency bond buying is getting a lot of traction in the news and all that, they're talking about it and all that, that means the urgency of pumping in the money will actually be there. That actually means there is a chance to create volume for trading the euro and euro crosses. But again, we have to be very, very careful with that. There may be volatility, trading opportunities next week, but in terms of direction and trend, we have to actually be very, very careful with regards to which pair we are picking, which euro crosses we're going to pick. Okay, so that's basically it, the rough sort of summary of the market. We look into the heat map at the moment. Two heat maps, one on Action Forex, the other ones are on the early Forex early warning as well. Let's just get to that. Okay, so if I go into the 4-hour chart right there, you can see 4-hour as a whole compared to the daily is more mixed, weekly more mixed. So let's say we go on the 4-hour. Now 4-hour, I want to let you guys know this is really important in terms of time frame. Okay, now when we look at 1-hour time frame, when we look onto the chart 1-hour time frame, the 1-hour time frame needs to always connect to one time frame up, which is the 4-hour time frame. Okay, so the 4-hour time frame actually reflects the 1-hour time frame. Very important for you guys to know this. Okay, so this means right now we are looking at 4-hour. Okay, here it says 4-hour, but actually it would reflect the 1-hour more. That means short term. Okay, so don't think that 4-hour, it's always one time frame up you need to connect it with. Okay, if you're looking at the 4-hour, you connect it with the 1-hour, because 4-hour and 1-hour, all right, it's always one time frame up. If it is daily chart, that means the daily and the weekly needs to connect. Okay, so if you're looking at the daily right now, it is actually the 4-hour. Okay, which is very mixed. But if you look at the 4-hour, this actually means short term. On the 1-hour to 4-hour, this is what's happening. It's clearer 1-hour and 4-hour at the moment. Okay, clearer meaning you have got all these dark red columns and dark blue columns, which is really good. So let's pay attention to short-term trades as of now until the next 1-hour to 4 hours. Okay, so this is basically what could potentially happen. This is what I want to show you onto your chart as well. So you can see that majority of currencies here are very, very weak against the US dollar. This is again short term, okay, 1-hour time frame. So don't get tricked with this 4-hour thing. Okay, this 4-hour is up to 4-hour. This is what it means. Daily up to the day. Okay, weekly up to a week. So it can be from the lower point to the week, or lower point to the 4-hour. So you can actually start off from the shortest term, but we want to always concentrate on the shortest term or short term when we talk about the 4-hour. Okay, so the 4-hour here, you can see there's a lot of opportunities as the way I can see it. So you can see that USD crosses here. When we get into USD crosses, you don't get you know, dark blue columns or dark red columns all in 4 time frame. So we want to look for that. Which one has a very clear one? The very clear one is CHF versus the NZD. So NZD versus CHF. So CHF is seen to be very, very strong against the NZD. So NZD is very, very weak. Okay, so there you go. So now we have NZD versus CHF, maybe a potential. We don't know that yet. So we want to go and look at the other time frame, the other heat map as well. But let's just put it as an alert. NZD CHF. We want to look at what's going on with that pair as well. And then I want to go on to the top movers, get a little bit of an idea what's going on. Because today, as if we look into the economic calendar, we've got Canada's employment and net change there. As you can see, if you click on that one there, it gives you the explanation what it is. So we want to also get alerted with Canada pairs or Canada crosses. Okay, so now I go back here. On the top movers itself, you can see you have got quite clear kind of trend on all four dots onto the 4 hour, the daily, the weekly, and the monthly. Okay, so I want to also write down AUD CHF. So you can see that the CHF pairs still is very much focused on, but then a majority of traders and investors, they are buying the CHF. So there is something going on with the risk element. Why? Because CHF and JPY, they are safe haven. So there must be something lurking behind the economic situation or something like that. Okay, so the rush of safe haven is still there. I think it could actually be for the Eurozone. You know why? Because the CHF is a safe haven for the European side. The JPY is a safe haven for the Asian side. Okay, and gold is like the global. Okay, this is the thing. And also USD is still the safe haven as well. Okay, when something happens, especially with the COVID, all this kind of stuff, you will see that the USD will also go up. And it depends on where the risk is coming from. The risk is more on the US side, the risk is more on the European side. It depends, okay, or the Asian side. So it will then decide where they're going to flush the money into which safe haven. Okay. All right. So I will write this one down, AUD CHF. I will also write down, see here is already got NZD CHF there as well. Okay. So NZD CHF, AUD CHF. Now you guys know as well, right? Every time AUD moves, NZD, New Zealand dollar is like the little sister, follows the AUD around. So you always want to attach AUD pairs with NZD pairs as well. So if it's good time to buy or sell AUD pairs or even NZD pairs, you always want to gather their the other correlated pairs as well. So AUD and NZD always connected. Okay. All right, there you go. So you've got AUD CHF, NZD CHF. Now, one last thing on Action Forex is just to go into the Action Bias section here as well. And just to take a look at each row, whether you have got a straight row that has got all the arrow ups, blue or not. So here, mostly it's all three, the first three time frames. We've got a lot of upside, as you can see, on Euro, AUD, Euro, NZD. So this is quite clear that AUD, NZD is really on the weak side. So now we want to confirm that and then refresh this one here and find for opportunities with which pair. And we want to look at the AUD as well as the NZD just because that's been alerted to us as well when we were checking on the other heat maps or the in Action Forex. So here, as you can see, AUD is all on the downside on the Asian session. All these are Asian session here. This is the European session. So in the European session, you can see that you've got arrow down, arrow down. Now this is good because you've got a very, very long and thick AUD selling bar there, right? Okay, here and here, both Asian and also European. Very good alert. And then you've got an arrow down, arrow down. That actually means that the volume of trading onto selling the AUD is very steady. The trend is also very steady, and the liquidity pump into it also is quite steady. But again, we have to analyze that on the chart and then make sure for us traders, the trend is really strong from what we can see on the technical side. This is all fundamental at the moment, okay? So we want to write down the next one, AUD USD. So here it is indicating downside for AUD. So that means upside on USD, still upside on the USD. So I want to look into the arrow down ones, especially there's an arrow on both sides, Asian session as well as the European session. Okay, we've got an arrow up on the euro, but then we didn't have the arrow up, but again it's giving us that indication that still AUD as a whole very, very bearish, which is good. Okay, so we know there's a steady trend on selling AUD. Okay, don't go into the buying mode. If you want to go an anti-trend trade, it's still okay, but I just want you guys to know the actual trend for each currency. Especially now we're going to talk about a lot more about AUD, CAD as well, depending on what's going on in the market. So we move up a little bit. All these ones are talking about USD pairs. Okay, so USD pairs right here, as you can see, you've got, again, it's alerted AUD USD, AUD USD on the selling side. Okay, now, all right, we've got some to talk about. I mean, we've talked about some, so let's dive straight into the practical side on the technical analysis side of it, so that we can straight away take a look at the pairs that we've been talking about. But before we talk about these pairs, I just want to go over or recap the ones that I have shared in terms of trade ideas as well this week. One of it is the GBP CHF. Now, GBP CHF, as you guys know, I think on Wednesday, we talked about selling the GBP versus the CHF. Now, CHF at the moment, I think we can see that this nice, I wouldn't say a very good sharp pattern, but it looks like it's following through the sharp pattern, and it's more probable because CHF, as we talked about it, it's on the upside. So GBP naturally is on a downside in this pair, right? So we have it already hit the short-term, how you call that, trade idea or trade signal that I have shared, and that was selling at 2770 and then take profit at 2690. That's already happened. That's finished. Okay, so now we're looking at the next round of potential for a price to fall again and for you to sell a GBP CHF again. So where do we actually sell a GBP CHF again? Now, at this moment of time, we have got price just trading at the 2677 area. So it's too close to the 2680, right? So 2670 would actually be your ideal selling price. Let me just, if you want to sell again, 2670 would be a good selling price right there to actually sell. But if you want to be a little bit on the safe side, you can always go a little bit lower than 2670. So 2665 maybe. It's entirely up to yourself, just to give it a little bit of room, because sometimes maybe it wants to reverse a little bit, play around, then come down. But I want you to pay a lot of attention right here with you've got a bullish mother candle right here playing around here, and we've got one here as well. Okay, so what that means is that it may actually be, you want to always look to the left. Now you want to sell, let's say 2670 or 2665. We want to look at the most recent to the left as well, the action of a single mother candle, how it has actually behaved. So here, for example, we've got these two. Let me show you. You've got two mother candles to look out for to give you a hint of what could actually happen. That one there, which is a longer one. And then we've also got this here, because the price is still on this one here. Okay, we've got one here. Now this body of this mother candle, the body alone is about 90 pips. Okay, we may not see it like that, even though visually it's quite small, right, like that, but it's on a daily chart. So this one, naturally, this longer one here, right down is 172 pips. Okay, so what that means is that right now, as you guys can see, GBP CHF on the daily chart that we're looking at, it's moving quite well in terms of, even though you see that little movement, but it's looking like it's got a lot of room to fall. The reason I say that is that if you look at the candle itself, all these candles, especially the most recent one, has got a very short wick at the very top. When it's got a very short wick at the very top, that actually means it's very weak to go up. Okay, if it's short, all right, it's short. No, sorry, if it is short like that, and it's actually just moving downwards, it looks like it's quite steady. It's quite steady all the way. If it's got no wick at the very top, it may be a little bit risky because the wick basically tells you it's weak to go up. Okay, the longer the wick, the wick, the weaker it is to go to that direction. So if this wick is long, as you can see, it's weak to go up because it's pointing upwards. If the wick is pointing downwards, the longer the wick, that means very weak to go down. Okay, so now as you can see, there is no wick down. So it's not weak to go down, it's quite strong to go down for GBP CHF. Okay, so let's have the what do you call that? The ADX. Oh, sorry, my mouse is going crazy. So you've got the average directional index right here, and you need the level 25 to be applied on. As you can see, even on the daily chart, you've got that blue line above the level 25, which indicates that the trend, whatever trend that we're looking at the moment, it looks very strong on the downside, right? It is actually quite strong. We go on to the 4-hour chart, which is by right, the short-term 1 hour, is actually up as well. And then when you look at the 1 hour, which is technically the 30 minutes, let's say, very super short term, also on the upside. Go on to the weekly, which is for the daily, it's very strong. So this actually means that, let's say if you go into the weekly and you see it even on the weekly, very strong mother candle. Okay, so strong mother candle with no wick at the bottom. That means it's not weak to the downside. It's very strong to the downside. And then we check it with ADX as well. Now that body is 350 pips on the weekly chart. Okay, so very strong, very nicely done. Now let's say if you were to want to sell the GBP CHF, and then for example you go on to the weekly chart right now, and then you see that there is a body of the mother candle, but there is a long wick at the bottom. That actually is telling you as well that it may be very weak to go down, even though the mother candle is long. So this is how you want to look at the behavior of the buying or the selling power from the body and the wick itself. Okay, you want to look at the wick as well. So here, it's got no wick on the daily chart, right? So that means it's quite good to the downside. Now, no wick again to the downside, correct? On the 4-hour chart. You've got a wick at the top on the 1-hour chart. That means on the shortest term, from 30 minutes to 1 hour, it tells you that it may not want to go up because it's quite weak to the upside. Why? Because you've got a wick to the upside. That's it. Simple, right? Okay, so now I think we may have a nice sort of selling opportunity, and we should write the trend for GBP CHF. Okay, so where do we actually go into it? If you guys want to look at it again, 2665, 1.2665 could be an ideal selling area. Now, I want to keep you guys very aware of the left side of the chart. So remember, I have highlighted that mother candle there and that mother candle. So this basically means that if at all there is something pulling price down for GBP CHF, it could actually go down, but it could go down to the length of the previous or most recent mother candle that you can see, which is this one here. So don't get too excited with the selling, even though we are actually quite good in a pace of selling the GBP CHF in terms of trend, in terms of CHF being very strong, in terms of a lot of things. It may give us a lot of trading opportunities to go keep selling, but in stages, not one time you sell, no stop loss. That is going to be very dangerous, okay? Because in a nice trend like this, it has to have some correction, and we need to always have the correction in our mind. That means when we have the correction in our mind, that means we need to apply stop losses, okay? We need to always think it will correct, or it will reverse, but where would it reverse? That is important so that we know when to actually exit before it could potentially reverse. So here, if you were to be selling, you need to not challenge the market and say, I think it's a big sell, so it will just sell. No, you need to always respect it and receive what the market would probably give you. Okay, you cannot take more than what it could potentially give you. Now at this moment, at this stage, it could give you until here, okay, until this area where the price is. Whether it will fall after that or not, nobody knows. But then you shouldn't regret if you've taken profit here and it continue to drop. No problems, okay? Because we don't want to develop the fear of missing out. The fear of missing out is very, very dangerous in trading, okay? The fear of missing out. You shouldn't think that you are missing out, especially if you're already profiting. If you're already profiting and then you're thinking, oh, I have to not miss out that as well, then that is very dangerous. Because that, if you made that mistake of entering every one opportunity, maybe if it is a mistake, it's going to drag down all your profit that you have worked hard for. So we don't want to do that, okay? So here, for example, it goes down, and if it were to continue its downfall of GBP CHF, it could go down to this level here, which is another 70 pips downwards. Okay, this is for me to know, and for us to know with regards to what we can see following the most recent upward movement here. Okay, because this is a strong bullish candle. That basically means that maybe there are some bulls waiting to take revenge, and they want to actually take the sellers out when it comes right to the opening price area of the previous mother candle. So you want to always do that. So here, that mother candle opening price there, or that support area, was at 2594. So my suggestion would probably be to look at the 2600 area and to take profit at 2610 instead. Okay, so 26, so let me maybe just move this one here and put it at 2610 as your TP. Okay, potentially, right? I'm just giving you a rough educational style of telling you where it could actually be ideal, but at the end of the day, it's your sort of rights to take any decision that you want. Okay, but I'm giving you a bit of a suggestion that if you're looking into selling or already selling, then your ideal take profit there is down at about, you can still make about 58 pips, so up to 50 pips, let's say, and take profit at 2610. Okay, now because that's about 50 plus pips potential, you need to double that for your stop loss, because it's quite a volatility. So 120, 130 maybe should be the size of your stop loss, only so that you don't get trapped. It is ideal for you to take that kind of size for your stop loss only because you are at the right side sort of the trend. The trend is quite strong to the downside. You've got some room as well for it to actually fall further. If it does go beyond, now, this is very important for us as well, is to actually respect this area. Okay, there you go. This area here, because of that, how you call that, a pin candle. So I want to also put in a shaded area there, this area here, could potentially still be a support area as well. So what that actually means is that if price were to go fall much further down and down and down and down and pierces through this blue area, then we have probably a better chance of prices reaching all the way down to 1.24 area. Okay, but again, after it comes under this blue area, I need to look at whether or not in the past did we have some bearish candles piercing through like really strong body? So here I don't see anything here. It's all blank here, right? So we need to actually go further to the left and to look at, I want to color this one properly. I want to maybe do this in purple. Okay, just so that we are clear that we are looking at this area, also this area, purple. Okay, now I want to look at whether or not this purple area in the past has got some very powerful selling pressure from a single mother candle, body of the mother candle. The answer to that is yes, we have got one here. We've got the bullish one there and no more others. So I want to highlight this one here. The answer to that is yes for now. But if we scroll to the left much more and we find more bearish mother candle going through, and it's going through this whole area here, that means there's a lot of selling opportunity and selling pressure and probability of price to actually come down a lot more and hit that D point or TP point for the sharp pattern as well. Okay, so now I will keep highlighting that off. We've got some more here. We've got another one potentially right there as well. But this one here, it started a little bit lower. So the selling started for that mother candle slightly lower at 2544. So 2540 would probably be another area to actually sell as well, but provided when prices have actually entered that pink, that purple zone there. Okay, so yes, it's good. It's good sign that we have got another mother candle there, the body of a bearish mother candle. Got that one there, maybe just a little bit more. So in the past, we've got that big fall, but then you see the wick is really long to the downside. That means it's really weak to the downside. Okay. Okay, I think that's it. So we've got about 3 candles, a mother candle there in that area. So it's not bad. Okay, so 2665 to sell, I think probably got triggered already, if I'm not mistaken, right? Yeah. Okay, so then you're selling and then you are taking profit at 2610. Okay, so there you go. 2610 to 65, 6510, 55 pips or so, about 50 pips. All right, that's for GBP CHF, by the way. Yeah, be careful with trading that one in terms of your stop loss. Make sure it's big enough, significant enough. So in other words, if you see a potential of 50 pips, okay, and you want to take this trade, you need to ask yourself, are you willing to lose, okay, 130 pips? So that 130 pips will help you decide as well not to trade one lot, obviously, right? Because if you're trading one lot, that actually means you need to ask yourself, are you willing to make about 500 to lose 1,300 US dollars if you are going to be trading with $10 per pip? So hence the reason you need to always match that up. $50, 50 pips potential, 130, let's say, pips for your stop loss. So if you were to actually then decide on your lot size at $1, then it's more manageable, right? So that means, are you willing to lose 130 pips, $130 as well? Okay, then that would be more manageable. If you say, maybe I want to make it 100, then that's your rights as well, and you decide like that. Okay, don't decide on the profit side of it. Okay, the profit side of it will come only if you have managed your risk side of it much better. All right. Okay. Any questions, guys, on GBP CHF before we move on to? We want to take a look at Nzd CHF, AUD CHF, and AUD USD as well. Any questions? So far, so good. All good. We can move on. Okay. So let me take a look. Let's go on to Nzd CHF. Okay, thank you, Alfred. Let's go to Nzd. Nzd USD is one. Nzd, let me just check that. Since AUD Nzd is here, AUD USD is here as well. So yeah, we'll just take a look at AUD. AUD USD first, okay? So let's look at AUD USD. Now, we'll start off with the 1 hour chart and go on like this. As you can see, you know, we have done our fundamentals earlier on roughly, and it's weak on AUD, it's weak on NZD as well. So on the 1 hour chart, it's showing that weakness, okay? And it is on the downside. And let me just check. There is a little bit of an issue here though, because if you look at this peak right here and this peak, that resembles that peak roughly, or this peak even, and that peak, right? So this is a slope down, that's a slope up. So that actually means that, okay, you got to watch out with any correction coming soon, maybe. So if this is on the 1 hour chart only anyway, but then look at the current price, you've got some there, it passed through some support already on this end. But then you've got some more area of support here, and some more further down. That's only on the 1 hour chart, okay? And let me just go on to the 4 hour chart, compare the trend on the 4 hour chart. Now, if you compare 1 hour, you go to the 1 hour and you look at all these three lines are jumbled up, not very good. The trend is not clear on the downside, okay? You only have the candles under the three lines, but you don't have a very clear trend. Yes, I'll just write that one down. USD CAD as well. Yes. Yes, we will look at NZD. It's a good point. NZD USD and AUD USD. Let's look at AUD USD and then NZD USD and then AUD CHF, NZD CHF, and then we look at USD CAD as well. Yeah, no problem. Okay, so now let's focus on AUD USD. Your AUD USD, very clear. It's telling you that the trend is not very strong. You got the three lines like that. So that actually means that, okay, this downward trend may actually correct quite soon. So when we go on to the 4 hour, it's a little bit clearer. You see the three lines start to open up, but still on the sideways trend, but it started to open up already, okay? And then you've got further movement of candles to the downside. So when I zoom out a little bit, then you get the idea that yes, it would most probably reverse to the upside. Why? When you look at to the left here, you need to have this area examined, drawn with a two lines to indicate potential support. So then we get the rectangle area right here, and we start to have this area here. And then we know that, okay, yes, there is a downtrend quite strong, but it may actually be due for a correction very soon. Okay. Now, the other thing as well is even on the 4 hour chart, you get divergence. Okay. Divergence means that it's got a mismatch between the candles here and the stochastic that we see here. Why? Because you see this peak here, it reflects that peak, okay? And this peak reflects that peak. There is no divergence here on the upper peak, but then on the lower here, we have a low here and then a lower low to the current price, right? But then here the low, and then the price is a slope up. So there is a divergence. So this is again telling us you need to watch out for a correction coming very soon. So what does that mean for us traders? We can still go on to the sell, but not to sell anytime now or anytime soon, but we can do a pending order only after it has gone up under this area downwards. Okay, then you may have a little bit of trading opportunity. Now, a very clear one on the 4-hour chart is if it breaks out of 7550 area, go downwards, you have got one area here that you can actually take profit, and the support would actually be here. So this could potentially be your take profit area for a sell, but then your sell needs to be 7540. Okay, 7540. So I will put this one here at 7540. This can be your pending order for AUD USD, 7540. Now you see it doesn't make sense, right? Let me just check. I think I've done something not right here. Here it gives you 7542. Sorry, I just misread that price. So 7540, probably your ideal selling is only here, which is really far away, right? So here to here, that's about 50 pips. So you can only sell 50 pips later. You have to wait until price fall. But again, you know, for those who want to take a little bit of risk, if you want to start selling now, you can try, you can do that, but make sure you are entering at the right price as well. Because now 75.94, now 75.94 will drop down to 75.80, so 75.70 will only be your ideal price. So let me mark that 75.70 price. There's another selling price, but again, it is 75.70, and I will mark that as a rate mark. So we've got 75.70 there, but again, you see the left and all that, very risky. A lot of it's right on the dot of support and various other things. So for those who want to take the risk, of course you can, and you can write along that mother candle right there. So if you take it earlier and sell at 75.70, but we don't know how that would pan out though, okay, because it's in the very risky zone. For me, it's a non-trading zone here, but you know, some traders want to take that risk, and you've got roughly, see, it's not worth it. It's only about almost 30 pips down. And do you want to take that risk on this pair? Perhaps we look at other pairs with better trading opportunities, because it's a little bit slow at the moment to enter AUD USD for a sell. That means no, we are a bit too early for that to happen, because we need solid reasons for it as well. Because if I want to take 75.40, I need to look to the left after this blue line, under this blue line. Have I seen any long bearish candles as well? See, it's very, very important for me to see that. So here, if I do that on the weekly chart or even on the daily chart, I think I've spotted some. So here, yes, you have got one there, ended up here, and you've got some more ended up lower. So yes, you do have selling opportunities, but later on, I would presume starting from Monday onwards, after it has dropped at least about 50 pips or so downward to actually tell us that it wants to break through this non-trading zone area. It's very essential for it to drop down the non-trading zone, because that is a potential support zone. If it breaks down through that support zone, then that the sellers have won that simple battle. And when they have won, they have taken their territory, then we can enter their territory because it's their territory, you see. But now, not yet their territory yet. So it's a battle, always constant battle between sellers and buyers. So there you go. Okay, and the current price for AUD USD is exactly at a opening price of a bullish mother candle as well. And if you look very carefully to the left, you've got another one there. So this has got backup from this one. Okay, so that actually means, I mean, my rough guess is if it starts to go up, it may go up as a correction and go up to this area right here, which is about 76.80 area, okay, which is the length of the mother candle there roughly. So 76.80 area is a psychological level. So 76.80, it might go up right now to tell you that, okay, maybe AUD has got some buying potential, but then it's got reversal potential as well at the 76.80. And that's where all these two bullish mother candles have actually finished and closed their price there. Okay, so you understand now that this is how things might pan out for now, the very shortest time frame. Okay, there we go. Is that clear for AUD USD? So what we can do now is to move to Nzd USD. So I will move on to Nzd USD. Now this is Nzd USD. I'll just get rid of this indicator here. I'm sorry, this buy sell button. Okay, start off with the 1 hour chart right there. It sort of mirrors AUD USD, right? You can see that similarity. So I would guess that it would probably be almost the same. It's just that it's gone down. The three lines it's clearer that it's on a downtrend, but then it doesn't match with the way three lines are moving. But when we go on to the 4 hour, it got clearer. It's exactly like the AUD USD in a way. Okay, so you can plan this the same way as AUD USD. And we go to the daily. It doesn't match in terms of the three lines, but then your space of the cell is between the 100 EMA and the 200 EMA right here. Okay, and I think very quickly, if I notice this one here, or maybe this one here, because we've got the bearish, the bullishness started on the mother candle here, and it mirrors the area of 200 EMA as a support as well. So my guess, there's potential for it to fall, find support there. But again, it can actually find support much earlier here as well, okay, for Nzd USD. So what we want to do now is to look at the price here, right, and then left, right, 7014. It's very close to the, to the downside. You have got 7,000, okay, psychological level 7000. So we will mark that one there. Zero. Okay, so here we have there and there. So I'll get rid of the last one there. So we have a little bit of space under 7,000 to 6,950 area, and that basically is your space of a potential sell for you, but only worth about 45 to 48 pips. Okay, let's say. So that is the space. But again, we need to make sure whether that space there in the past, have we got very long mother candle piercing through there? Only then we know, yes, we as well can actually enter this trade because there has been selling power. So here we had buying power going through that area. We have got some selling power here, but you see this selling power here with the mother candle has actually stopped here. Okay, so that actually means we need to take into consideration that line there, get rid of that. So now your selling potential became smaller, right? But also your risk potential became smaller too, because you are trying to look at areas that will not, what do you call that? Sometimes you set the TP quite big, but then it didn't really go there. It went earlier and then reverse, you see? So we want to prevent that as well. But we do have selling power in that area, okay? But we just want to be a little bit safe. 6,960 would probably still be ideal for you to take profit. Okay. I'll polish this one up in terms of the price, 6,960, let's say. Okay. Right. Then you need to adjust the entry price 7,000. Okay. So it has to be 6,990. So 6,990, 10 pips under the 7,000. So 6,990. There you go. Now it becomes even more narrow, right? Maybe traders don't want to hear that usually, but it's just to keep you guys a little bit safer and better. Then you have got 30 pips. So now this is how we want to do pending orders in a more systematic, relaxed way, especially on a Friday. Okay, even if you want to do this kind of pending order, you can still do a pending order on a Friday, provided you do a very nice, safe pending order that doesn't stress you out after you have done it. Because you don't want to do pending orders that will stress you out during the weekend, and then you'll be thinking about whether or not you've done it the right way, or what if the market reverses and a big gap happens on a Monday. All these kind of worries should not actually be your worry, especially from Friday onwards. Okay, if not, you won't have quality weekend as traders. So as traders, you want to have a balanced quality weekend as well, but it's all how you have planned your trades, even though it's pending order on a Friday. So this is how you do it. Now you've got a nice price, a nice space of 30 pips here. Let's say you want to do a pending order Nzd Usd. It's quite safe. I wouldn't say safe, but I would say it's more manageable. It's more bite size. 30 pips than to think about 110 pips, 200 pips potential, and then you are thinking and dreaming and hoping for it. It's probably not an ideal way to enjoy your weekend if you were to worry like that from Friday onwards, because that worry on Friday onwards will marinate throughout the weekend, because it will go into your sleep and into your mornings and throughout your day. So there's just no point doing that. So we want to have bite-sized risk as well. So 30 pips is quite good. 30 pips, if you want to look at stop loss as well, you need to look at stop loss double the 30 pips, let's say 60, okay? Or 60, 70 would probably be better. So if it is 70, then that actually means if you want to trade $1 per pip, are you willing to risk $70 as opposed to $700, correct? If you trade the $10 per pip, that's 700. Now, $700 worth of risk will not make your weekend very steady at all. Okay, $70 manageable. Okay, so let's say you have Nzd USD, and earlier on we talked about AUD USD. So you have got a reasonable size of risk, $130. Remember, if you are trading $1 per pip on AUD USD, so you'll be risking 130, correct? Then 130 plus this one here, Nzd USD, is another 70, so that is 200. Okay, 200 you are willing to risk. Okay, you need to know and understand that if you feel comfortable with risking this 200 as opposed to 700, 800, 1000, for example, if this 200 can still make you enjoy your weekend, then you place it. If it is not going to help you enjoy your weekend and you will worry about it and you cannot let go of this 200, don't do it. As simple as that. Okay, so hopefully that's clear. Now you need to understand you have 200 now, amount that you are willing to risk if you were to place all these pending orders today and for the weekend. You need to let go of this $200. Okay, are you willing to look at more trading opportunities now? If the answer is yes, then it's good. But also you need to understand you need to increase your amount that you are willing to risk as well if you're looking for more trading opportunities. So that's all the reminder I have for you guys as traders. Okay, so this is how realistically to actually plan your trade on a Friday, especially. This is what the market wrap up is, to actually help you understand the risk that you are willing to take, but also to balancely understand how to enjoy your weekend and not have all these thoughts into your head, because it's really not worth it to actually work so hard during the week and still work so hard, work out stressfully in your mind as well during the weekend. That actually means you don't have rest at all, and then 24/7 you'll be worrying. So that's just no point. So trading is not about worrying 24/7. Trading is about planning, letting go, and understanding your level of risk that you have planned for and just follow it. That's it. Okay. So this is very, very important. And then you will see that if you decide to trade this way and manage your stress and your worry this way, then your opening market onwards would actually improve on its own because you are in a better frame of mind on Monday onwards. If your Monday has been a collection of worry from the week before and the weekend, you will see that you will get so exhausted. And we as traders, whether you're full-time, part-time, it doesn't matter, because the full-time and part-time actually is the reflection of how you trade, correct? You can actually be part-time and trade like a part-timer, but you can actually be a part-timer, trade like a full-time trader, and worry more than a full-time trader, correct? So this is very important for you guys to understand. So this is all manageable and much more manageable in terms of your risk if you think of it this way and you take it in stages. Little bites of 30 pips is not supposed to be seen as little bites of profit, so you're not very happy with the profits. No, you cannot see it like that. You need to see it as little bites that can multiply, provided you are taking good decisions in the trades. And little bites of profit also means little bites of risk. Okay, so this is very important. Okay, guys, any other questions before we go on to I think it's Nzd CHF and Aud CHF. So this is clear, right now for Nzd USD, Aud USD as well. So let's go on to Nzd CHF. Okay. All right, let's look at Nzd CHF. Now, as a pair at the moment, or as in trend itself and the volume, it is moving quite strongly, aggressively, with Nzd CHF falling at the moment. This is on the 4-hour chart. But as you can see, when you look at the candles itself, okay, they are bearish, showing you bearishness, showing you some lower highs, lower lows. But then when you look at the three lines, the three exponential moving averages, the 50, the 100, and 200, they're all entangled up. The moment they're entangled up or moving sideways, it tells you that something may go wrong with the movement of the trend direction. It may actually weaken, or it may reverse, it may do something. So it's not a clear fall. So if we go into the daily chart, we can see that it mirrors again Aud USD and Nzd USD in some way or another. Okay, it's very close to one of the lines, the EMA line, which is the 100 EMA right there. Okay, so this EMA line may prove to be a support. Usually it could be a support or a resistance. But then when you look at this EMA line, very simple, you draw a line there, you can see that to the left, it's just the opening price of a single bullish mother candle as well. So there is a potential for a reversal to happen very, very soon. So if I go on to the oscillator on stochastic to just look at, maybe there is divergence, we don't know, right? So here, for example, you have this peak, this low right here and this low, correct? And then you've got the current price. Now, from here to here, it's a slight slope down, okay? Downward type slope. From here to the current price is sort of like a horizontal level. It's got no slope, okay? So that slope and this no slope red line is a divergence. So that actually means that there may be a reversal coming very soon. So do not get overly excited with Nzd CHF and selling it. You can get excited for now, but then you need to also get as excited knowing where you could roughly exit. That's very important. If you get excited on exit, entry and exit, and then excited on the risk calculation as well, then you will be at the very right direction to go, okay, with trading. So here, for example, I mean, with someone who concentrates and focus on just the geometric pattern side of it, for example, will get very excited, and then they will say, Kenny, look, I have found a very nice pattern here. Okay, I pull the Fibonacci from A to B, and I see that it touches the 50% on the dot, 50% Fibonacci, which is great and good. Okay, I would agree to that level with the trader. And then he says B2C, I'm drawing the B2C right now. Okay, and I have got the A to B and I've put it right there. Okay, and I redrew, or I have copy pasted the A to B equals the C to D length. Okay, and I found that my TP is at 6,385, and then I think I want to enter this trade because I can make 100 pips. All right, so that is the usual thought flow script that most traders will use. Okay, I've heard this thousands, if not hundreds of thousands of times during my 15 years of trading and training traders. So this is where they will actually get excited, draw the pattern, make very nice colorful lines, and then say that, hey, you know, Kenny, I have also found the centroid. So I've already entered at 0.6570 because you taught me the psychological level entry, and I have sold there at 6,570. I'm profiting, you know, I'm really very, very happy. And now I have already profited my profit, all profit talk, right? Profit. I'm profiting at 80 plus pips now, and I've traded one lot, so you know how much money I'm making now. I said, okay, this is based on a real story, inspired and based on a real story, okay, which is just about 3 days ago with a trader from Africa. So then this is basically is a mirror of this this trade on Nzdchf, because I've written down Nzdchf, but it's not for Nzdchf, it's for another pair, which basically was mirroring this this pattern. So then here, for example, he said, I have already made that amount of money, and that's about I think it was close to 1,000 US dollars already in profit. He got really excited. So I have pinpointed what I've pinpointed to you guys today as well on the left, because on the left for that pair has got so many support opening price of a single monthly candle as well, and some very, very strong support. So I've mentioned this to him in a one-to-one because it's a very big client, a very big trader basically, and I did a bit of a one-to-one 15 minutes, only 10 minutes, 15 minutes, just to show him exactly where he needs to exit. So then he was aware of it. He was aware of it, and he said, "Yes, you are right, and I will be very careful with those areas." So we, at the time when we had that webinar, it was, I think, about 80 pips distance to that level. Okay, so I told him, I said, 80 pips, you know, it's quite a bit of pips, but then I just want you to be aware of it. So because his mind is already 1,000 in profit, and he can actually, with 80 more pips to take, he already calculated, and his eyes are all going very crazily excited. Okay, so then I left it for the day, and basically it was the week after. Now the week after, which is this week, which was yesterday when I spoke to him, he lost it all. Okay, now the reason is he told me that he was aware of the level, but he didn't apply. He applied stop loss, but for some reason he canceled the stop loss. So because I mentioned to him that you can actually don't need to cancel stop losses, you just have to reduce it, and so that you got that risk reduced, like a trailing stop loss style. Okay, so then he said from the way the candle was moving, he thought it's going to be really strong, he said, and that is why he left it, and he didn't put any above that 80 pips, you know. So we calculated, instead of 80 pips, he should take about 72 pips or something like that, if I'm not mistaken. And he said he didn't apply that, but because he was monitoring it. Okay, so the thing is that he lost that whole opportunity of making at least 2,000. You know, he was trading with one lot. Okay, so because there was a 200, almost 200 plus, it's 200 plus fall expected. Okay, and it actually hit the 200, but then it started reverse, making a lot of other movements as well. It was for the USD ZAR. Okay, because the USD ZAR has got a style to trade. So different pairs has got some things you need to be aware of. Okay, because it can be volatile at certain prices, certain level, certain pairs can actually respect certain psychological level more than other psychological levels. So we need to experiment on all that as well. So here we have sort of a similar pattern, because it triggered me this Nzdchf to have this kind of pattern as well, with the USD ZAR on a different time frame. So yeah, there you go, guys. I just want to share that because I want you guys to, you know, be safe and basically safe from the corona outside, but then on your screen inside the house, you have to also be safe with your risk, okay, and your money. So risk and money management is very important. So you got to be safe all around, even though you're sitting in a house. You know, it can be very risky as well, especially when you're trading the market. Okay, so just to be aware, so you guys know now how it looks like, the risk, the potential risk for NZDCHF. Okay, so any questions on NZDCHF before we move to AUDCHF, because we are already 20 minutes past 10 here, my time. So we want to end the session quite soon as well. So right after we go over AUDCHF perhaps, and also your questions. Okay. All right, let's move on to AUDCHF. Okay, we've got AUDCHF. Let me clear all the ones here. Brilliant. Now, AUDCHF, that's on a daily chart. We'll start off with a 1 hour chart, let's say. Now, very different. AUDCHF is very different from the rest of the AUD and NZD pairs that we have actually seen. Reason is, on the 1 hour, very clear, very nice trend telling us it's a downtrend. You've got the 3 lines like that, because all the other pairs didn't have that on the 1 hour chart. It's got a nice flow like a river to the downside, nice flow of candlesticks under all 3 lines. Very good. We got ADX up as well. Again, this is only on the 1 hour chart. We need to then make a story, connect the story of 1 hour to the 4 hour and see whether or not they are actually matching quite well. Now, on the ADX side, the strength of the trend to the downside for AUD is very strong, very good. 1 hour and 4 hour, the same on the ADX. But on the candles as well, the same, very strong. All this mother candle coming down, really strong. But it is telling us a little bit of story that may change in terms of the trend. The trend is not trend clarity. We are looking at ADX. ADX tells you trend strength. The 3 lines tells you clarity of the trend. Okay, so you can move in a car that has got great brakes, and you are moving in a car in high speed in a rain. Okay, in a rainy weather. So your car works great, brake works great, everything is all checked, but your visibility is not clear. It is exactly what right now, AUD on the 4-hour chart. The visibility of trends not clear. So what do? Do you actually speed up more your intention to trade? Do you speed it up or you slow it down? You need to slow it down, because if you were to be in a car that functions all great and well, doesn't mean you can speed up and go crazy even when you cannot see clearly. Okay, so because you cannot see clearly, you need to find out ways to actually repair your visibility of the trend at this moment of time. So you need to look to the left. You need to look to the left to see what's going on. When you zoom out, you can see the bigger picture a little bit clearer, and you can see that the current price is at 70.25, which basically means just 5 pips below will actually be your psychological number that can be a place where the price can reverse at 70.00. Okay, 7,000. Okay. Sorry, 20, 17.20. Sorry about that. Okay, there you go. So you have got only about 4 to 5 pips under. There is a psychological level. But again, when you look to the left, you will see that under that psychological level, there is a support area, and I will put it right on the opening price of the mother candle right there. I will also put it onto the lowest wick right there as well. So now we have got 3 lines, okay, that is giving us a hint of no entry zone or no trading zone. Okay, now made up by all these 3 lines right here. So these 3 lines have created a nice safe zone for you not to enter, not to trade. So even though AUD great and good downtrend, we are only looking at trading on a downtrend for AUD under 6993, which basically means under 6980. Okay, 6980 will be your psychological level, just so that we don't get trapped and we don't get into issues or problems with being trapped and then, you know, enter at the wrong price and all that. So you want to sell, well and good, probably better to sell at 6970, which basically means 6980 and under. Okay, so now we want to make sure and look to the left. Now we look to the left. I will create a bigger zone, a no trading zone right here. Okay, now you can see that a little bit clearer. Now I don't see any selling opportunity under this big zone that I have drawn, because I have not seen, to what my eyes could actually see, any bearish long candle under this area. Nothing, zero. Okay, so then I need to zoom out, maybe go to the weekly chart, and then I will need to look at, I need to go there. Okay, need to go and sort of look to the left. We have got something here, but not very confident. We've got that one here. This is on a daily chart. Okay, we've got a drop of price from that level down to here, only about 40 pips there. So not very confident. Confident or not is not the thing. I just want to look at whether we have got any selling power, you know. So here, for example, on AUD/CHF, there is something fishy going on with the downtrend. It doesn't really give me any reason to believe under this 69.80 and under, there is tremendous selling that might take place. I don't have that confidence. I don't see it, because you guys can also see that there is just no single bearish mother candle from this area onwards down. There's just none. Okay, so what does this mean? This actually means that there is a potential of price coming down, finding support, and boom upwards. There's something going to happen with AUD, maybe positively or not, or CHF may actually become weak for some reason or another. We don't know. So this is what I think would actually happen. Okay, so with that, I don't want to make any sort of decision to trade the AUD CHF as yet, because it's just very unsafe to do so. Okay, so that is for AUD CHF. Nzd CHF, AUD CHF. So yeah, that's basically it. Any other pairs that you guys want to see, or any questions at all, guys? Any questions? All good? Maybe very quickly, we'll take a look at gold and also oil very quickly. Okay. All right, guys. I'll just rattle on for gold. Now, gold is on the upside. You can see a potential, there's some similarity for some reason with the Australian New Zealand crosses, and the correlation in terms of how it's moving on the chart. Now, this is on the 4-hour chart. You can actually see that clarity wise, it's like you're driving in the storm, heavy rain. You cannot actually see the front of your screen. So your windscreen, it's just, you just don't see anything. Your car is all functioning well. You are moving, but visibility is really not clear for gold at this moment of time. Okay, you've got a lot of mess in terms of trend. You've got all these mess of trend reflected by the way the three lines are moving as well for gold. Okay, so it's just not a pair or an instrument that I would actually look at this moment of time, XAU USD or gold versus the dollar. It's just not ideal at this moment of time. It's just not a very good pair to look at. And it's probably better to look at currencies and look at the fundamentals driving which currency pairs much better, and then look at the USD crosses, and then use the USD crosses when you are trading USD crosses with clarity of trend. Then you can see the movements in gold, then you trade gold. Okay, but for now, not really ideal for me personally. Now, with regards to oil, if I go into the shorter term, let's say from the 30 minutes, it is still signaling, still sideways, not very clear on trend as well, but then it's got better bias to the downside. It is showing more room that it wants to move to the downside much more, okay, than gold. For example, gold is just not clear. But we don't look at the daily chart. We're looking at shorter term for oil. Okay, as of now, oil maybe 50 minutes, 30 minutes, and all that have some room, I would guess, with regards to selling side of it, because we do have some bearishness. We've got from this area onwards, we've got that mother candle right there, taking it from that one there. Okay, a single mother candle there. So there, and that area there reflects a collection of price at the 62.47 area. So it has got the ability, I would think, to actually fall at 62.45 area or so. And that is for the shortest term. But after that, I think it will take it more on a sideways type movement. So you've got a bit of a, let me just maybe like this. But then the upper one here goes like this. Okay, so you see it's getting very close to the end of the triangle as well before it breaks out, or things like that. But it basically shows that it has a very small or narrow movement for the short term on a sideway before it breaks or breaks up or whatever. But it's not very clear yet, the trend. So yeah, that's what's happening to oil at this moment. Okay. That is UK oil. US oil, we have drawn a bearish ABCD pattern, so it is actually hasn't really, as of now, crossed or broken out of the centroid area at 59.25. So once it breaks out of that price, it's got a better possibility to actually fall. But then that fall of price for US oil may have a bit of a limit, and you want to exit before it reaches 58.46. Okay, before, let's say, 58 58.50, let's say, you want to exit already. Okay, 58.50 or so, because we have got that finishing of that mother candle price close there, and you want to exit before that, because then after it actually gone down more, then you can see more possibility. But at the moment, it's like the UK oil as well. In a way, it's got its range, but it's got a little bit more room to fall, but not too much, just following that candle there. Okay. All right, guys, I think that's all I have for you guys. Any questions at all before I end the session today? Today we gone quite long, 10:30 now. So yeah, brilliant. So yeah, if you guys got no questions, I wish to end this session. And first and foremost, I want to say a big thank you for attending my webinar, spending time with me on my webinar. And with that, thank you once again, but enjoy your weekend and totally trading free mind. Okay, it's very important for you to be ready with clarity as well for Mondays onwards. Okay, good, brilliant, guys. With that, thank you again. Have a fantastic weekend. Enjoy and relax and rest. And we shall then collect all this energy from a rested weekend to actually have a clear, visible visibility of the market. Okay, guys, take care. Enjoy. Bye-bye for now.